Welcome back for another top-notch video. This week, guys, we'll be talking about the last week of May, the 27th through the 31st, for our weekly stock review. As always, we talk about the TSP, Roth IRAs, and 401ks. If you're a TSP fan and have one of those accounts, that is the CSI and F fund. For 401k/Roth IRA, we look at the ETFs IVV, VXF, EFA, and AGG. With those, the C fund and IVV ETF translate to the S&P 500. The S fund/VXF translate to small caps. I fund/EFA is international markets, and the F fund or AGG is bonds. With our review, we tend to go over a very general view and then kind of go into some more specific things. I'm going to show you guys some other things too, just moving along into the Top Notch channel and what we've done for the month of May. Try to give you guys a better idea of what's going on. So with the Top Notch channel, we decided to make two moves this month. We moved from the S fund on the 9th of May to the G fund, and then on the end of the month we moved to get our last move in. We moved from the G fund to the F fund. We'll see how that translated out when we moved. So as you can see here, our funds return when we moved from the 9th to the 29th, we gained a total. So as you can see, this is a total of 4.45%. When we moved out of that fund, obviously that fund lost money, so we didn't lose that money in the S fund. So we ended up in the G fund, which didn't make much. It was only 0.1%. But so basically, we gained a total of 4.45% on the S fund. And then from the 29th of May to the 30th of May, we stayed out of that S fund, so we gained another almost 2% there. And we went to the S fund, so we gained a total of 0.64 there. So what's that translate to? So we ended up gaining for the first half of the month almost 5% in the S fund, and then another 2% towards the last 2 days. That translated to 6.41% gained on the S fund or VXF, small caps. And then we moved our funds to bonds for those last 2 days, and we picked up a 0.5% there. So we gained, for the month of May, on the stock indices, we gained a total of 7.05% on the stock funds, which is really, really, really good, guys. That is an excellent move. That is very well done. I will say that it's not all just me. There's a little luck involved with some of that stuff, but that was a very decent move. As you can see from our stock market funds on the Thrift Savings Thrift Savings Talk, TSP Talk. Tom does some commentary on here. You can check out their website. But as you can see, it was a pretty nasty month for our equity funds, losing close to 6% for this, or almost more than 6% for the C and S fund, and then almost 5% for that I fund, where the F fund did pick up a little bit. So we ended up making our move a little bit there, and that ended up doing very, very well for us. Now we'll just kind of go into, I want to show you guys what we have gained so far for this year. So here is my gain sheet for the year. This kind of looks confusing. There's a lot involved in this. I'm not going to go through everything, but this is what we've kind of contributed for the year. Here's what we've gained or lost money-wise for the year, and here's our percentage. So as you can see, we did pretty well for that first month, and then we kind of took a break for a couple months trying to see where markets would go. And then in April, we picked up a good percentage there. And then for this month, why most funds lost close to 6%, like I mentioned here, 6%, and 5%. We only lost not even a full percentage point. So that is a very good move for the Top Notch channel. So far this year, we're sitting at almost 10% here. When you look at that, we are ahead of all the life cycle funds for the year. We are ahead of the I fund, and we're lagging just a little bit behind that C and S fund for the time being. We're hoping to maybe catch up a little bit more as this F fund expands, and we'll have to see where that goes. With all of that, we're going to move into our general funds, kind of give you guys an overview, and then do our analysis on each stock fund for this week. So with TSP Talk, like I mentioned, Tom does some comments here. One thing he was kind of concerned with that he mentioned was the yield curve. As you can see, the yield curve is starting to invert. The last time we saw that was back 2008 and 2007 before this giant plunge. When it inverted, we saw that we kind of saw it as kind of like a warning sign. As you can see, we're getting close to that again. So just something to keep in mind and just stay cautious about. With the C fund or IVV ETF, as you can see, we ended up, this is Thursday's close, but Friday's close, we ended up moving below that 200-day moving average, and we're looking to see if we can't fill this gap here. I think it might do that. Markets probably will come down next week, especially with some of the news we saw this weekend. So we could see that definitely. So just keep that in mind when looking at the C fund. I'll go more in depth and detail later on. With VXF has been down below its 200-day moving average for some time now, and it doesn't look to be coming back anytime soon. He drew this nice trend line in here. There is an open gap up here, but before we can reach that open gap, I think we're going to see some more down movement in the short term with the VXF or the S fund. EFA has been below its 200-day moving average. It's been trying to get above that, but obviously we have not. We'll have to wait and see on that. Not a place to really have funds at this time. I'll review it a little later on. And then the last thing I want to look at is AGG. It broke above its trend line, so that is a very positive thing. We got into this the very last minute of the month, right around this time when it started poking its head above. Yet to be seen if this will come back down into its trend line, but the trend does seem to be pretty strong, especially with our equity funds starting to pick up speed on losing cash. So we'll have to see where that goes. Going into a more specific detail for each of our funds, we're going to start off with IYY, and you're like, what is IYY? He didn't mention that. IYY is the total market fund. It's all stocks, all market participants. We like to see where this fund goes because we never want to bet against the entire market. If we bet against the entire market, we have a less probability chancing of making money in our stock funds because the whole market is going down. So some interesting things with IYY. As you can see, IYY did cross the 200-day moving average on its way down. It did do this back in March, but the biggest complaint I have with this or see with this is back in March when it crossed, we had our blue line, which we like to talk about so much, way above that red line. We were losing a little bit of momentum, but not much. This time around, as you can see, our blue line has crossed our red line. We are in the negative on our weekly chart, and even on a 2-day chart for IYY, we are starting to move back up in momentum. This is what we like to call a fake out. Usually they don't last very long, but they are quite severe when they do happen. So keep that in mind with IYY, and that is the general stock market funds. So that means our general indice funds have the probability to drop in the future. So just keep that in mind. Moving right along to IVV. This is IVV. This is the C fund. And with the C fund, as you can see, it did end up dropping below that 200-day moving average on Friday, like we mentioned. And we'll just have to wait and see. Like I said, there's a little gap here. I don't know if that got filled or not, but I don't really see a stopping point for this, and I would really hate to see the 50-day moving average and the 20-day moving average start to come over. As you can see, the 20-day moving average did go through that 50-day moving average, and we'll have to wait and see where that goes, but it doesn't look good, guys, as we look at IVV or the C fund. As you can see on a weekly basis, we did cross that moving average line on our way down, and the last time we crossed that was back in October, and as you can see with October, we lost a lot of capital here. So we just want to safeguard some of our capital. We want to stay out of this fund for right now and just wait and see what's going to happen with it. As you can see, we also did pick up momentum. We had the the delivery oscillator pick up some speed in the negative. We went from negative 7.39 to 7.70, and that was a completed bar. So that is for Friday. That was a completed bar, and we are moving more towards the negative, and price is reacting pretty well to that. It is on its way down. Even on a 4-hour basis, where we don't have any moves or positions to get into with IVV, so it's just best to not stay in this fund at this time, and we are not here currently. Moving on to VXF or the S fund. This is where we've been at for a large portion of our year. We saw a big move back off of the January-February time frame. We were in for a little bit of that, and then we saw some consolidation. Now we are seeing kind of that pullback from that large move, some consolidation from that move. But we did move below our 200-day moving average. We've been under there for some time. These indices are starting to get close, so please keep that in mind moving forward with VXF. Like I mentioned with VXF, we did cross that line right around the beginning of March and end of March time frame. With that, we were in kind of a different area. As you can see, that blue line was way above that red line. We didn't have so many concerns with that crossing the 200-day moving average, but now with it the blue line crossing the red line, moving into negative territory with our DO oscillator, with our oscillator. Excuse me. We are seeing just a lot of bad price action here. This is 1, 2, 3, 4 weeks now of downward movement with VXF or the S fund. On a 2-day chart, we're seeing an escalation here of our oscillator just continuing to move down. Price is moving right along with it. We're starting to hit the bottom of these Bollinger Bands, but there's no real end in sight. We need to see this pick up back towards the positive before we have a position to enter. Don't even have a position on that 4-hour chart. So another fund to just kind of stay away of at this time. And we'll have to wait and see what happens with VXF. Moving on to EFA, International Markets, or the I fund. With the I fund, we are below our 200-day moving average. We had some great price action coming up. Saw it pop above that 200-day that 200-day moving average, and now we're headed back below that. Indices are on their way back down. Clearly, when we see EFA or the I fund, we did also cross for the weekly. As you can see, IYY is a very good indicator of all three of our equity funds, as all equity funds have now crossed over, confirmed through that blue line and the red line. We are picking up speed with the negative oscillator. That is not good. That is not something we want to see. But luckily, we are not in any of these funds since the 9th of May, so we kind of stayed out of these equity funds. And this one's a little bit better shape. As you can see, we're trying to come out here, but that blue line is just way below the red line there. Really important that we have some patience now and we try to wait these funds out just a little bit. Try to get as much gain as possible. Like I mentioned, we ended up making a pretty good gain for this month of May. Over 7% on the S fund for just the month of May, which is pretty huge, 7% for 1 month. We could probably see some increased volatility as well since we're seeing such big swings in the future. The last fund we're going to talk about is AGG. With AGG, this is bonds or the F fund. With F fund, we saw it kind of getting close here. We wanted to see if this was going to end up breaking out, and it did. It ended up breaking out towards the top side. We were kind of waiting for that. We got on the fund just a little bit late, but we did pick up a little bit of it here towards the end. With our fund, when we look at it, as you can see on a weekly basis, the stock fund is still in the positive, blue line above the red line. That's one of our main indicators that this is a fund to be in. And our oscillator is starting to turn back green here and picking up speed. So this is a great fund to be in. I'm a little concerned here with just the Bollinger Bands, but that's not that big of a deal. And even on a 2-day chart, it looks like we're doing very, very well, very, very healthy for this fund. Good fund to be in for the next month. And on our 4-hour, we just did see a little fake out here, so probably a little more steam to run on AGG before we think about transitioning back into our stock funds. I don't want to lose positions on our stock funds, but I would sure love to be ahead of all our stock funds before we jump back into those, just so we can say we're beating markets on every market for the year. So that is some great stuff, guys. I think we did really well this month for the Top Notch channel. This is probably one of our better months that we've had for sure with stock funds. If you guys have questions, go ahead and write those in the comments below. I'm going to show you guys where our funds are at for the year. You might have saw that based off of our commentary. But yes, we are sitting currently in AGG or the F fund 100% with new funds and contributions going to the F fund for the year. So those funds will be posited in a few days here, and we'll continue to watch markets closely. Again, if you guys like this channel, please go ahead and like, subscribe, or share. That's really important for us. If you have questions, write those in the comments below. And as always, we really do appreciate your guys' support. I hope you guys have a wonderful week, and we'll see. That's another top-notch video. We'll see you guys next time.